Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 17th, 2025, and we're diving into Netflix's latest earnings report for the first quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Netflix's performance, especially given their strong start to the year.
Absolutely. Netflix has been a major player in the streaming industry, and their Q1 2025 report has just been released. Let's delve into the details. Revenue and profitability overview. Let's start with the top line. Netflix reported a net revenue of $10.54 billion for Q1 2025, marking a 13% increase year over year. John, what are the key drivers behind this growth?
Netflix's revenue growth was primarily driven by an increase in membership and higher pricing. Despite some foreign exchange headwinds, the company managed to exceed its revenue guidance due to stronger than expected subscription and ad revenue.
And how about their profitability?
Operating income rose to $3.35 billion, a 27% increase from the previous year, with an operating margin of 31.7%. This improvement is attributed to the timing of expenses and the revenue upside, which also led to a significant boost in their earnings per share.
EPS performance and analyst expectations. Now let's talk about earnings per share. Netflix reported an adjusted EPS of $6.61, which is a substantial beat over the forecasted $5.74 by analysts. John, what does this tell us about Netflix's financial health?
This EPS beat indicates that Netflix is not only managing its costs effectively, but also capitalizing on its revenue streams. The 25% year-over-year increase in EPS reflects their strong operational execution and strategic pricing adjustments.
With 10 analysts forecasting an EPS of $5.74, this performance certainly exceeded expectations.
Indeed, it shows that Netflix is on a solid path to achieving its financial goals for 2025, maintaining investor confidence.
Strategic initiatives and content expansion. Netflix has been expanding its strategic initiatives, including the launch of a new ad tech platform and live programming. Can you elaborate on these developments, John?
Netflix successfully launched its ad tech platform in the US, which is a significant step in growing its ads business. Additionally, their live programming, such as WWE Raw and the upcoming NFL game, is gaining traction and contributing to their content diversity.
And how is their content slate performing?
Netflix's content strategy is paying off, with series like Adolescence and films like Back in Action making it to their all-time most popular lists. This content success supports their solid revenue and profit growth outlook for 2025, with guidance set between $43.5 and $44.5 billion.
Cash flow and capital structure. Let's shift our focus to cash flow and capital structure. Netflix reported net cash from operating activities of $2.8 billion and free cash flow of $2.7 billion. What does this indicate about their financial strategy?
These figures highlight Netflix's strong cash generation capabilities, which are crucial for funding content investments and strategic initiatives. The company also repurchased $3.5 billion worth of shares and reduced debt by $800 million, reflecting a balanced approach to capital allocation.
It seems like Netflix is maintaining a robust financial position.
Absolutely. Their ability to generate substantial free cash flow while managing debt and returning value to shareholders through buybacks is a positive sign for investors.
Key takeaways. In summary, Netflix has delivered a strong performance in Q1 2025, with impressive revenue growth, a significant EPS beat, and robust cash flow. John, what are your final thoughts on Netflix's investment prospects?
Netflix's strategic initiatives, content expansion, and financial discipline position it well for continued growth. The company's ability to exceed expectations and maintain a solid outlook makes it an attractive investment opportunity.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Netflix's performance in the comments below.